Okay, guys.
Okay, welcome to week 4 of Super Sandang. So today we're going to be talking about something very important: handling emotions with investing, as well as like making day-to-day financial decisions as well. So, okay, so if you see this chart, and imagine you bought around here, let's say, like a few days ago, and then you see it going like this. What would you be feeling? Does anyone have anything to say? Jonas, what would you be feeling?
I would be feeling very sad because that's what happened to my Bitcoin investment.
Oh yeah, on the trading simulator,
Yeah.
right? Would you like to say anything? Okay. You feel like sad, right? This is like something that a lot of people feel when it
Scared?
you're scared, right? Yeah. So that's a lot of common emotions when people feel, and some people even get into depression. So it's really important. So today we're going to be talking about how to handle emotions so that you don't get too caught up with it, and make sure your well-being stays good when you invest as well. Okay, now imagine you bought around here and it's now there. What will you be feeling? Good, right?
Good, right?
Yeah,
Yeah.
so you might be feeling really good and
Yeah.
really happy, but don't let it lead to overconfidence. And we're going to be talking about a bit about overconfidence and how it could like affect your decisions. So why is it important to manage your emotions? So emotions is like natural instinct. So like we use it to make all of our decisions, but sometimes it's not like always wise to just rely on emotions. Even though it takes more time to like make a calculated approach, it's worth it because you always have to think about what it could lead to and not always react to our emotions. Like if you're angry, you don't just go punch someone. So like if you're upset that your stock go down, you don't automatically hit sell. So
Exactly. That's balancing the short term and long term. Saying it might be worse in the short term, but better in the long term.
yeah, so most of you have heard the phrase going with your gut, right? So when you go with your gut, it could lead to both good and bad outcomes. It could be a good warning sign to like stuff like Squid Game coin, which is like a scam. It could alert you about scams, but it could be bad when you like it leads to panic selling. So these are like a few tips and tricks that I use when I invest, like to manage emotions. Like if I see it crashing one day, like I'll be devastated, but this is what I do. So there's sometimes I just take a few deep breaths just to calm myself, and also like just like refocusing on the long term. You have to think about your long-term goal and remember that, and just keep that in mind. Be hopeful, be optimistic. So Jack, would you like to take this?
Okay, so you feel different emotions at different stages in the market. So the first stage we'll be talking about is when the market's at the top, when it's peaking. And then we'll be talking about when it's turning down, so starting to downturn. And then when it's hit the bottom, and then when it starts to rebound again. Okay. Okay, so when you're at the peak, there's often a lot of overconfidence, and you get a lot of fear of missing out, as a lot of other people are making money. However, you should not be greedy, and this is when you should sell, because if you hold on too long with false expectations, it's going to rise even more. You could pay in the long term.
Yeah, and it's always important to set a clear goal. So you might say, okay, I'm going to enter the market when Ethereum is at 100,000 baht, and I'll exit when it's 130,000 baht. So you just have to keep those guidelines clear and make sure you stick to it. Because if you get too greedy, then it can start like falling, and you might lose all your profit more.
Okay, so when it starts turning down, there's a lot of fear, a lot of panic selling, because people don't want to have losses. So they start selling it as it starts to go down before it falls down too far. But this could limit growth in the long term, as now you have losses, although they've been minimalized. Okay, when you're hitting bottom, this is when in the market that you're most depressed, as a lot of people will just be like disappointed with themselves and regret that they didn't sell earlier, just because they could be going like, oh damn, I should have sold then, because they just missed the golden opportunity. But this is actually the biggest opportunity to grow. As while it's low, you can like buy more shares and reinvest more to make more profit in the future.
Yeah, this is a really common saying. Like you might have heard, it's like a Warren Buffett quote: "Buy when there's blood on the streets." It may take a lot of guts, but when it's really low, it's always like could lead to like a lot of profits in the long run. and it would, like, even though you might feel devastated, oh no, like you're not hopeful that it will rise again, it'll be safe, like it might be safer in some cases to just hold on or even invest more.
Okay, so rebounding. This is the most hopeful part of the cycle, as you can see it start going back up again, and you think you might be able to get some more money and like start cutting your losses. But there's also a lot of doubt in yourself, as you don't quite trust yourself since you already made the mistake once. But what you should be doing is learning from the mistake you made so you don't make it again. And yeah, here the bull market's back, there's rapid growth, and here it's the same as the peak. Don't be overconfident. Just stick to your plan and your long-term goal, what you set, the limits you set, and just be confident in yourself.
You learn from your mistakes. Don't, like, if you before you bought at low and then it went higher and then you thought, oh, I'm gonna keep on waiting because it's gonna go up more, it's gonna go up more, but it went down. Now you know that you should always have a clear exit and enter point.
Okay, here so we have a table of what emotions you'll feel, when you'll feel them, and how to deal with them. So the first one is disappointment in yourself. This is when the market is at the bottom and the prices are very low. What you can do is take a break and just refocus on something else that can like refresh you, so you come back in with a fresh mind once it starts to rebound.
And something really important is always just take a break from crypto sometimes. Just don't look at it sometimes. It's healthy not to. Because it's always important to have a balance. Like not be too attached. Don't let the stock market or crypto market control your emotions. Like some days you might be happy, some days you might be sad. That's not good. So just know that, like, just detach yourself from it.
Okay, then we have a low self-esteem, which you'll feel when the market is rebounding. Because often, as I said earlier, you might have doubt in yourself and be like, oh damn, what if I make the same mistake again? And what I suggest you do here is get advice from people who you trust. Normally I'd say someone you know instead of going on the internet. But also people who are knowledgeable, because you can use their advice and feel confident that it's them who start to do it, not you.
And something really important to have, even like someone who has, you should have a mentor, someone who you can always talk to, and so like maybe someone who's older than you, someone who's more knowledgeable than you, just to help reinforce like your confidence and make sure that you're making the right decisions. It's not always good to rely on just one person, but have like a mentor. So like for me, it's my dad. So I just like sometimes listen to what he has to say, some advice he has to say, but I always take it with a pinch of salt with whoever I'm listening. And
okay, so next you have overconfidence. As I said, this is when the market's at the peak. This is when people tend to get greedy or have false expectations of the market growing even more. And what you have to do is just stick to your plans. Remember your goals and what you set for your portfolio at the start when you were still investing. And just try to forecast and try to predict the market based on data instead of just gut feeling.
It is like a really prime example. So like, remember when it started COVID times, the oil prices dropped like mad, and it was like a really big crash. And us small investors, like we don't really have a big effect, but those really people who have like so many tons and own like factories of oil and all, they were really in like the really darkest times. But look today, they hold it for like almost 2 years now, and oil is back up like anything, like it's crazy high. So it's always important to like wait and be patient. Just don't be too greedy and be patient when you invest.
And also to avoid this, try to diversify your assets. So if, like let's say oil drops, you still have assets, high value assets in other industries, so they didn't drop as well, so you can still have some good stock. And lastly, there's fear, which is when the market is dropping. And this is when people start to panic sell, and this is probably the most powerful emotion, and it's the most volatile. So what you need to do is just practice some patience and mindfulness, and I know that can be hard at times, especially when you're scared, but just try and refocus on something else, and just practice mindfulness, take a couple deep breaths in, and just stay present.
All right, so there's some key takeaways, because at the end of the day, we're all human, and you're bound to feel emotions when you're failing in your investments. But here are some things that I summarized that will help you to not like die that much. So the first thing is you can trade progressively. s- I think my slide is on the next one.
Here, here, just like,
Yeah, skip this one first.
Wait, no,
What
go
the
back.
hell? Whatever. I'll just talk about it. It's okay. So first thing, you can invest progressively. So instead of going all in at one time, you progressively put smaller amount of money. So instead of trading, like for example, tens of thousands of baht each time, you cut that down into like maybe even hundreds of baht every time. So you're making smaller decisions every time, because at the end of the day, investing is about getting small, like small wins, not big victories. Because if sometimes you have to see an opportunity and just go all in, it might pay off, but the other time your consequences would be larger. So yeah, and then second, you need to be prepared to lose your funds. So one tip I use is have your crypto or whatever investment profits not move the profit for 5 years. So for example, if my profit, I'm reliant on that to pay my tuition, and then the market goes down, and then you can't afford to pay your tuition, you're bound to feel some emotion. So yeah, so just not move your. So one thing is to have a fixed amount of time where you're not reliant on your crypto, and then you take out the profit at a later time.
So yeah, so what Thomas is saying is here is just spend what you afford. So don't spend your living expenses or anything like that you actually need to sustain yourself. But only afford what you can actually lose, like, and not like need it to survive. You'll still be in an okay place.
And it's always important, like, if you compare yourself to others, like, imagine I just started investing or something. I started with 10,000 baht or like 1,000 baht, and I'm looking to my friend who has started like with 10,000 baht and made like a lot of money already. It's very important not to compare with others, because you have to focus on yourself and know that it takes small steps to get to your final position. Like if you started with 1,000 baht, then you made like 500 baht profit, then you slowly grow it, and it keeps on compounding, and like it slowly starts to grow. And one more thing I have to say is always be careful when you borrow money and invest. This is like something I have to say, like, you shouldn't do, because you're using someone else's money and trying to earn on that, but you might have lost that. So it's very dangerous to do this. Even like if you see the leveraging tool on some sites like crypto sites and stock sites, that could be very dangerous, because you might lose more than what you invested. So it's very dangerous. But like in the crypto simulator, it's fine. But in real life, just be careful with it.
Yeah. So another one is sometimes you have to reassess your emotions. So like on the bull market crypto run, sometimes I find myself thinking, maybe I should put all my money into this because there's so much profit. But at the other time, you have to reassess your expectations, because if you look at the stock market, the average growth each year is a 7% growth, and some years it might go up to like 20%, and some years you might lose 30%. But then your overall goal has to be realistic, and investing is not like a walk in the park, like me beating Mr. Meadows in a 1v1. Like, yeah, that's a walk in the park. But investing is not. So if your goal is more than a 7% in the stock market, then you have to prepare to take more risk and have to have the mindset to lose more. And yeah, and then lastly, one more thing is you also could study like past history on different stock market crashes, and oftentimes you'll notice that market rebounds and then you'll find great recovery. So yeah, at those times is where most of the opportunities are grasped and most monies are made. Yeah, so you just gotta be patient. And last thing, is a reminder that volatility isn't necessarily destructive, but it can be a good thing.
Yeah, so just a reminder that we still have the competition ongoing. It's in 2 weeks' time, so you can still start and still win. And the site is Bitcoin Flip, so you can just get started now or continue. And I think the current leader, if I'm not wrong, is you're at 30,000, right? Yeah, so he's made $20,000 already, so round of applause to him. So, whoever wants to beat him, you can go try him, but he's probably good at like...
Future Warren Buffett right there.
And just, guys, also just to tell you guys, we have a guest speaker next week, so we have a special session So
Yep.
do make sure you come along for that.
Yeah, so we have a guest speaker next week. His name is Pav Gill, and he is the Chief Legal Officer at ZipMex, which is the largest crypto exchange in Asia. So he manages the whole of Asia, and if you'd like to learn, he's going to talk about how like the youth is going to have a role in crypto in the future, and a lot of really exciting things. He has a lot of experience, and make sure you come along.
Yes, sir. And last thing before we end this session, one quote by one of the most renowned investor, Warren Buffett. He stated that temperament is more important than knowledge. So that's just something to think about.
Yeah, so thank you for coming along today. Make sure you come next week for our guest speaker session. He's going to be online, so he's going to be on the call like on this TV screen, and you can have we have a Q&A session as well. So if you have any questions you have to ask him, he's more than happy to answer.
Yeah, I believe next week's our last session before our exam.
Yeah, one day.
Yeah.
And also, guys, if you just want to have a catch up on anything you've forgotten or missed, or if you come to a session, they'll all be on short summaries on Instagram, and then we'll have the full videos on YouTube.
Yeah.
Yeah, if you guys do have any questions you want to ask, like in terms of investing tips or like advice, maybe you guys can text the Super Satan Instagram account, and we'll find our best efforts to answer your queries.
Yeah, or just comment on any of the posts. And also, if any of you guys do want to join, just message Rainer here, as he will invite you to the Discord server, and then we'll sort out a position for you.
Okay. Thank you.
Thank you.